Hey guys, welcome to an all-new episode of Basic Investment Terms. Today we're going to be talking about exchange-traded funds. These are commonly known as ETFs. Now I'm going to try and break this down here, and I'm going to keep this very brief and keep this very basic. It's easy to get lost in the intricacies and the details surrounding ETFs, but we're just going to break this down very basically here. So I like to look at ETFs as a mix of funds, mutual funds that is, and stocks. So I'll explain what I mean here. On one side we have, if we just break down the term here, we have exchange traded and we have fund. So the exchange traded part tells us that this is much like a stock in the sense that it trades on the stock exchange actively every single day, every single minute, every hour. It has a price that can evolve with time, and you can even day trade it if you want to. Other similarities that it has with regular stock is that you can short an ETF, you can be long an ETF as you would anything, but most importantly, you can short an ETF as well. So this is quite interesting in that sense. And the fund aspect of it, which represents sort of the mutual fund aspect of an ETF, means that it doesn't represent a single entity. It doesn't represent a single company, but much rather a basket of different things, of different companies or of different commodities, bonds, stocks. It can even track indexes. So it represents, you get that diversification that you would if you chose to invest in a mutual fund, but with certain aspects that resemble regular stocks, in the sense that you can trade it on the stock exchange as you would any other stock. Now, you're not directly the owner of whatever is within that ETF. What the financial institutions do to create an ETF is that they buy, let's say they want to make a tech ETF. So they'll buy Google, they'll buy Amazon, they'll buy Apple, they'll buy Microsoft, all these companies. So they'll buy shares of every single one of these companies, and then they will freeze these shares and create tech ETF shares that represent the value of these said shares. And they'll then divide all of these shares and sell them to people that are interested in buying the tech ETF that they offer. So this is known as a creation. They create ETF shares and then they put them on the market as an individual company. So the tech ETF you can then buy into, and you would sort of be an indirect owner of Google, Amazon, etc., that are within this ETF, but you're not directly the owner of these shares. The real owner remains the financial institution that bought them in the first place. So you're an indirect owner. You have diversification within that ETF. You can trade it on the stock exchange. You can be long, you can be short. And the other advantages of having an ETF is that you usually have a lower fee. Management expense ratios are usually a lot lower than they would be for a regular mutual fund, because they're not actively managed by fund managers as mutual funds are. They're just frozen shares that are made available in a bundle that is then called whatever ETF. All right. So there are certain aspects of an ETF that can attract an investor, such as having that diversification, having that security, having the lower fees in the long term. They can really add up and they can really eat out your profits. And also that aspect of being able to trade on the stock exchange and then being able to short a certain ETFs is very attractive to certain investors. So, and another thing is that you would have to pay commission as you would with anything you're trading with your stockbroker. So, be it stocks, be it mutual funds, when you buy and sell an ETF, you have to pay commissions much as you would when you're buying or selling anything else. So that remains unchanged. So, I hope this is brief and very basic introduction to ETFs was useful to you guys. If you have any questions, don't hesitate. Put them down in the comments just down below here. I will go into more detail concerning different types of ETFs. but I think it's a little heavy to make this all in one single video. So I'm gonna chop this all out into smaller videos to make it more digestible. But if you have any questions, hit me up in the comments down below. If you like this video, don't forget to leave it a thumbs up. Don't forget to subscribe, and definitely share this with your friends if you appreciate the video. Thanks guys, have a good one.